Never run out of battery again with the INIU portable charger, the slimmest 10,000 milliamp hour power bank that keeps your devices charged on the go. Stay powered up wherever you go. Click the link in the video description to shop now on Amazon.
Welcome back to Bitcoin Bulletin. I'm your host, Emma. Today we're talking about a major warning from BlackRock, the world's biggest asset manager, regarding the potential threat of quantum computing on Bitcoin. So, what's going on? In their latest prospectus for its iShares Bitcoin Trust ETF, BlackRock has mentioned quantum computing as a risk factor that could impact Bitcoin's future. Now, you might be thinking, what's so big about quantum computing? Well, let me tell you. Quantum computers have the theoretical ability to override the cryptographic schemes that secure blockchains like Bitcoin. The problem is, if these powerful machines become widespread, they could potentially break the cryptography underlying Bitcoin, rendering it flawed and ineffective. We're talking about a fundamental threat to the security of the Bitcoin network itself. But that's not all. BlackRock also warns that other technological advances, including digital computing, algebraic geometry, and even advances in mathematics, could result in cryptography becoming ineffective. This means that even if Bitcoin is unaffected, any reduction in confidence in the source code or cryptography underlying digital assets could negatively impact demand for Bitcoin. Now, this might seem like a hypothetical risk, but we've seen it happen before. In the past, flaws in the source code for digital assets have been exposed and exploited, resulting in security breaches, theft of digital assets, and even disabled functionality for users. The implications are significant. If the cryptography underlying Bitcoin becomes ineffective, it could compromise the security of the network, allowing malicious actors to steal Bitcoin or take control of the network. This would undoubtedly dampen demand for Bitcoin, leading to a decline in its value. But what's really interesting is that this risk isn't limited to Bitcoin alone. If another digital asset were affected by similar circumstances, it could negatively impact not just that one asset, but the entire market. And because digital assets are still relatively new and continue to develop, there may be additional risks in the future that we can't even predict yet. So, what does this mean for Bitcoin investors? Well, BlackRock's IBIT, which is believed to be the most successful ETF of all time, has $70.1 billion worth of Bitcoin backing it. But with this warning from BlackRock, it's clear that the risks associated with Bitcoin are very real. At Bitcoin Bulletin, we'll continue to monitor this situation closely and bring you updates as more information becomes available. Thank you for watching, and don't forget to follow us on X, Facebook, and Telegram for the latest news and analysis on all things Bitcoin.